Hi, and welcome to this week's episode of Money with Alpha. This week, I want to talk about something which is a little bit more on the technical side of things, but I see the confusion, I suppose, around this quite a lot. So I thought it's worth doing an episode on. I'll try and make it as simple as possible. Essentially, I get a lot of confusion from people around the difference between profit and cash flow. Why do I have a profit and I'm paying tax on this profit? Which you're paying tax, yay, you're making a profit. That's exciting. So that is worth celebrating for starters. But why is there a profit in my tax return for my business, but I don't have cash in the bank? Why? What's going on here? And there's a number of things happening. A lot of it though, if I could sum it up in one word, timing. Timing is one of the things. It's probably one of the biggest things to understand, but it's also about keeping track of your cash. So cash itself is a representation of what we earn, yes, but it comes in and it goes out. So we earn money, and we spend money. So the cash part of it, it's not like physical, tangible cash because a lot of things these days is digital. A lot of what we see online, and a lot of the transactions that we do, mostly our phones, are our cards and our banks. So it's the word cash, while it signifies like the physical cash that we used to get, and there was a whole envelope system. We used to pay people in cash. I remember when I was a kid, my dad had his own business, and people would often pay him in cash, and like a lot of money as well. Like from a cash perspective, I was like, wow, these days everybody would just do, give me your bank details, or do you take a credit card? It's something we've really gotten out of the habit of managing, which is why I harp on so much about being aware of your cash flow. Because even just recently, and my mother and I were just having this conversation about how easy it is to spend money. Like it goes out. And when you have cash, you realize how quickly it goes out. I notice this when I go to the farmer's market every 2 weeks. I take cash with me because these are small businesses. I like to try and pay cash where I can anyway, especially when they're there with their produce, and I don't know, it just feels more natural to pay cash as well. But I always try and support small businesses by paying cash. And I realized at the end of it, I was like, wow, I've just gone and spent way more than I probably, well, not way more, but it's just gone. Because I often go there with like a defined idea of what I'm going to spend anyway, but it doesn't always get there, I have to say. I think it often ends up more than what I would originally expect. But then come things like, my daughter being, oh, Mama, can we get a juice? I'm like, sure, let's get a juice. One time she wanted to try gozleme. She'd never tried it before, and we had family visiting, and one of the family members had bought some gosling, and she was like, "Oh, Mama, that was so nice. Can I have one?" I was like, "Oh, okay." I usually try and get vegetarian versions of things because if she doesn't finish it, then at least I can eat it. But this was a chicken one, so anyway, she ate about half of it, and then hubby got the rest. So it's, yeah. So anyway, but cash itself is really, it's important to understand. And in our businesses, especially because it is all digital, and quite often there's automated things that we have automated payments that will come out once a month, or we get billed, or we do the billing. So there's things where we might bill for work that we've done, but we don't get paid immediately. Depending on our payment terms, it could be 7 days, could be 14 days, could be 30. When I worked in corporate as a consultant, they had 90-day payment terms, and the person submitting the invoice missed the deadline, so it ended up being like 4 months until I got paid. And I can tell you that's hurt, because I was getting back into the workforce after having my daughter, and I thought, oh my gosh, I'd already done, I think it was about 8 months, 7 months without any income, and then add another 4 months on top of that, and it all just like compounded. So when I did get paid, I got paid really well, but it was that waiting it out. So I really became aware of cash flow management at that particular point in time. So it's keeping an eye on what's the time. Again, when I came back to the word timing, how is the timing of when do you do the work versus when you get paid? And then the same thing in return as well, when you hire somebody to do something for you and then you pay them. So you get the benefit of their work, and then how long until you pay? So when exactly do you pay them? What income have you got coming in to be able to cover that payment? It's really being aware of all of that. And our accounting systems can manage it, but they usually manage it sort of in retrospect. We look at things historically. It's not necessarily a forward-looking concept. And that's something I'd really like to encourage you to at least start to look at little by little, or at least be more conscious of the terms and the concepts behind it. And the more you start to be aware of it, the more you'll start to notice things in your business. You'd be like, oh, payment terms, yes. Or, oh, that month, yes, I can see what's coming. because the really real value of having cash flow management plan, and you can call there's budgeting and forecasting. I'll go into the differences between them as well too, but if you have an idea of what your cash flow is doing, and this is where to look at it in a forward concept, you can look at your budget. You look at what you spent in the last 12 months. You can cookie cutter that for the next 12 months as a start, and then that can become your base sort of start from putting a budget together. And then you can look at, okay, well, what came in? And admittedly, the income side with a small business is where it fluctuates the most, depending on your business model. Expenses tend to be a little more sure. It's a bit easier to plan for the expenses because we're a bit more in control of those, whereas we're not as in control of the income side coming in, again, depending on your business model. Having subscriptions and sort of retainers and regular work like that actually makes that part really easy. It sort of tends to fill in the gaps a bit. But let's just say you start with that first 12 months sort of budget based on what you earned and spent last year. Then you can start to review it and go, okay, did I use all of these services that I'm paying for? Yes. Okay, great. Now I know when they're coming. If they're regular payments and that keeps it consistent, sometimes like I pay for some things annually, I pay for some things quarterly, and I pay for some things monthly. So I sort of look at when the spikes are and I can see them coming, and I make sure I've got money put aside to cover paying the spikes for the spikes of income months rather than that money just kind of disappearing, because unless we have a plan for it, it quite often disappears. I talk about this a lot with saving as well. Unless we have something specific to save for, there'll always be some sort of an emergency that will happen, and we have to break and dig into those savings. It's the same thing goes with your income and expenses too, and your cash flow management. Let's have a look. And this is where like you have your budget and then you can start forecasting, because it's not to say that say you set up your budget in June for the following, July to June, because in Australia, or depending on where you are in the world, if you're in the UK and the US, it'll be January to December. I shouldn't think the UK is March. Anyway, whatever your tax year ends is usually how we manage it, because we have tax returns we have to submit. So it tends to dictate how we do our cash flow management. That doesn't say you can't do it on a calendar year if you really want to. So let's just assume January to December. So come December, you're going to set up your cash flow for the next 12 months. Things will change in those 12 months. You may have a different opportunity open for you in your business. You might pivot a little bit. Things might, whatever, life changes. The one constant in life is change. So that's where monthly you can do some forecasting or reforecasting, and you can go, okay, well, that's what's happened this month. That's going to change my trajectory a little bit going forward for this and this. I might have to take on some extra software. I might have to bring in a team member in order to cover the amount of work I need to do. However, I'm going to have more income than I originally thought I was going to have. So I need to adjust my budget by reforecasting it going forward so I can see what's going to happen. And that really allows you to make better decisions when you can see it. It's like trying to, you hop out the door in the morning and you don't have a plan of where you're going to go, what you're going to do, and you just kind of like amble around. You're like, okay. It's like going on holiday and visiting a country. I mean, I'm a planner, so this is, I have to admit, I struggle with the idea of like just plonking myself in a place and having no idea what there is to see, because my fear is I would leave it and go, I missed out on all this stuff because I hadn't done any research beforehand. I'm just going to sidebar for a sec. When we went to Noumea recently, I did so much research because I was trying to find all these cultural things, and we found one extra thing when we were there because I was so determined to hunt for it. But it was almost validating that I couldn't find anything else because I'd looked so hard. And so by the time we left there, I was like, I've seen everything there is to see that was in the realm of what I wanted. So there's a feeling of yay. Yeah, but again, that's just how my brain works. Spontaneity, and that might not matter for everybody. So you really have to work with how you enjoy working. However, it is still valuable to do that budgeting and that reforecasting process, because when it comes to money, spontaneity, not so great. You don't want to be landed with a bill that you're like, oh, right, okay. What am I going to do about this now? I need to scramble around. I'm going to have to dig into that savings, or I might have to get a loan, heaven forbid, to pay it. That's not a situation that you want to find yourself in. So you have to dig deep and try and find whatever element and amount of planning you have inside you, and try and set it up in a way that's easier to manage too. But it's really, really important to do that, because that's going to impact why you're seeing profit and not have cash in the bank, because there's timing that's happening, unexpected things are coming in, your expenses are being taken, your income's being taken by the expenses. And that might just be a point in time as well. And if you, most small businesses will operate on what they call cash accounting, which is when you actually physically receive it, is when it gets it's sort of recorded. So physical cash in, income, physical cash out, expense. There's the opposite, which is another option, which is accrual accounting, and that's more for bigger businesses where it's more the time the transaction happens rather than when the cash actually comes in or goes out. I'm not going to go down that path because that will probably confuse. So we'll just stick with the cash side, which is literally when the cash comes into your bank account and when the cash leaves your bank account. It is your income and expenses. But knowing when that's going to happen rather than each month being a bit of a surprise. And there's certain things that we know, like when I know I'm going to need to pay my daughter's school fees at the beginning of every quarter. I know that the rates and the electricity and the water bill are going to come at the beginning of every quarter. It's at a quarter increments. There's things like that. And when I review my quarterly business activity statement, I can see the same things in there every quarter. So I know the things that come in monthly. I can see the things that come in quarterly. And I prepare it myself. So I actually have that level of visibility. And I like to do that. If someone's preparing it for you, please review it. Don't just offload that responsibility to someone else, because what it's also then doing is you might be missing out on seeing opportunities. You might go, oh, okay, so this and this happened. This person tends to come to me at this time of the year. I wonder if I could approach more people like that at that time of the year. Maybe that's when that market actually needs my services, because that's when this person comes every single year. So you can start to see where there's trends. So all this really comes together, like your budgeting, your forecasting, managing your cash flow, seeing trends, understanding how your business really operates. And then you can also see the products and services that are earning you the most. And you can see which ones you want to lean into, the ones that you spend more of your advertising dollars on. It just becomes a lot easier to make those better decisions rather than all just being a little bit random and going, oh, well, I'll try this. And, oh, well, I'll do that. And there is testing and measuring in any business. Like you're never going to 100% know that something's going to work before you do it, which is why it's really good to reflect backwards. But then it helps you by reflecting backwards to make decisions going forwards. So ultimately that's where you've got like your profit, which is that piece of paper that's, on your tax return that says this is the money that you earned and this is the money that you spent. But the timing of all of that will very much impact the cash that you have. And by getting into that level of detail, you can then make better decisions about what you're spending your money on. I've used this example before, but I had 3 different softwares that did roughly the same sorts of things in relation to, doing captions and video editing and all of that. And in the end, I was like, what do I need 3? One of them does one thing really well and the other 2 sort of okay. And that's all right, because that one thing it does really well is the main thing that I need. So I can let those other 2 go. And that saved me like $50 a month. Reading the fine print is another thing too. I've paid for 2 months of something that I actually didn't want because I signed up for what I didn't realize was a trial. I thought I was signing up. I thought I was paying for just, that specific thing. I just wanted to make a PDF smaller. But what it actually did, and it did say it very clearly when I went back in the email and had a read, but things happen. They fall through the cracks for all of us. And it signed me up for a monthly thing, which was costing me $75 a month. So it wasn't even like it was like a $15, $20 thing. It was 75 Aussie a month. And I was thought, oh my gosh. And it didn't even occur to me until the second month that it hit my credit card. I was like, oh, they've actually put me on a payment plan. I didn't want that. So I had to cancel it quick smart. So I thought, well, so you have to be on top of this. Otherwise you're going to end up like it literally can go into the hundreds of dollars every month if you're not aware about what you're actually paying for and the value that you're getting back for it. So cash flow management is really important. And in terms of how you manage it, that one is a bit of a tricky one. There are softwares that claim to do it. Ultimately, though, the data has to come from somewhere, and your accounting software will be pulling in your bank details, and how it categorizes it, I don't always find particularly great. And the reporting functionality out of it, not always fantastic. So I tend to often do a back-end Excel spreadsheet for a lot of it. And because bank statements quite often don't come out in Excel either. And when it's in PDF, I can't do much with it. So it's figure out how to do that suits you best. It might even be a conversation you have with your bookkeeper. Can they give you this information? I personally haven't found that part particularly easy to do because they usually give it to me in the categories of the balance sheet or the profit and loss, like in general ledger terms. I was like, I actually want the actual expenses line by line, and I want to be able to see how much I'm spending on advertising, how much I'm spending on software and apps, what am I actually spending on networking, what am all the various categories, so you can actually then start to see what you're spending your money on. But you can try, you never know. Your accountant may be able to help you with this as well, but generally cash flow management is not something that they do unless they've got an arm of their business that does that. So you might need to ask that question and see if they can help you with this too. I'm also available if you need some help too, or even if you just want to ask some questions. So if you want to leave some reviews or feedback on this, please let me know. And if you have any questions or any topics that you would like me to cover, please send me a message. I would love to make sure that I keep these topics relevant for you. I'm going to have some guests coming in the next couple of months, which will be really exciting. And I will continue to do things on the mindset side as well. And just generally life intentions, because I think that is really, really important. When we have a bit more clarity and create some space around that, it makes looking at our money a little less intimidating. And that is one of my intentions, is to try and help you figure out the money stuff so that you can thrive and grow your business and make the impact that you want to have. So on that note, enjoy the rest of your week, and I will see you again next week.